Ladies and gentlemen, good day and welcome to the Epigral Ltd Q1 FY26 earnings conference call hosted by Emkay Global Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this call is being recorded. With this, I now hand the conference over to Mr. Meet Vora from Emkay Global Financial Services Limited. Thank you and over to you, sir.
Thank you. Good evening, everyone. Thank you for joining us on Epigral Ltd's Q1 FY26 results conference call. We would like to thank the management for giving us this opportunity to host them. On this call, we are joined with Epigral's management represented by Mr. Maulik Patel, Chairman and Managing Director, Mr. Kausal Soparkar, Executive Director, Mr. Sanjay Jain, Chief Financial Officer, and Mr. Milind Kotecha, Investor Relations. I would like to invite Mr. Maulik Patel to initiate the proceedings with his opening remarks, post which we will have an interactive Q&A session. Thank you and over to you, sir.
Thank you, Meet. Good afternoon, everyone, and welcome to the call to discuss Epigral's Q1 FY26 performance. I believe you had an opportunity to view the earnings presentation that was released earlier on Saturday. Chemical industry is on the growth path, but a slower pace. Volatility was witnessed in Q1 FY26 and is expected to continue on account of uncertainty on tariffs from the US and also because of the geopolitical situation. However, domestic demand remains strong compared to the global demand. In the quarter ended June 2025, we had a revenue degrowth of around 6% mainly on account of decrease in volume due to the maintenance work happening at the plant and which will end by end of this quarter. We expect optimum utilization to restart by end of Q2 FY26 and also because of the early monsoon. Hence, we believe that second half of FY26 will be better compared to first half of FY26. But even in this situation, we were able to maintain our EBITDA margin of 27% on account of maintaining our efficiency level and because of a better product mix. Revenue contribution from the derivatives and the specialty business stood at 50% and we expect this contribution to increase in coming years along with the commissioning of reaching optimum of the announced CapEx projects. Our CapEx projects of doubling capacity of CPVC resin and epichlorohydrin plant and 19.80 megawatt of wind and solar hybrid power plant are moving as per the schedule and are expected to be commissioned within the timeline and budget announced. We expect this to strengthen our diversification and reach to a 70% revenue contribution from the derivatives and specialty business. This expansion along with chlorotoluene value chain which got commissioned in March 2025 are expected to drive growth in FY27 and FY28. The chlorotoluene value chain plant was commissioned in March 2025 and products are at various levels of approval with customers. We expect to generate sizable revenue from this by the end of this financial year. Our Q1 FY26 P&L numbers include depreciation and interest on the chlorotoluene value chain project without much contribution to the top line and bottom line. As mentioned earlier, we have also ventured into 19.80 megawatt of wind solar hybrid power plant. Once it is commissioned, our total plant capacity will reach to 38.14 megawatt as a hybrid power plant. Approximately 15% of total energy requirement will be met through green energy, contributing to the environment by reducing carbon emission. On the future capex side, we are focused and working on two major things. First, in the current complex, even after CPVC and ECH doubling expansion, we will be left with a land parcel where we are evaluating a project to further strengthen our integrated complex and optimize on the infrastructure that we have invested. This project is at the evaluation stage and we will announce details once it is freezed and approved by the board. Second, as we have conveyed earlier, we have bought around 100 acres of the land in Dahej, just 1 kilometer away from our existing complex for expansion and growth for next 7 years. At this new land, we are also evaluating new chemistry to have the next leg of growth beyond 2028. This new chemistry will be in line with the company's strategy. Import substitution product where demand is expected to grow to in double-digit percentage for next 10 years or so, and we can generate good ROC. We have been working on this since long, and we are closer to finalizing the same, and maybe in the couple of quarters we will announce. Once it is freezed and approved by the board. In line with these plans, our team is focused and geared up to move forward in our direction of scalability and profitability, strengthening our integration and creating value for our stakeholders. I now hand over to call to Mr. Sanjay Jain, our CFO, who will take us through the financials.
Thank you, Maulik. Let me take you through Q1 numbers. Our overall plant utilization stood at 73% versus 76% in previous quarter. On year-on-year basis, revenue dropped by 6% to 615 crore. This is mainly on account of lower volumes. Revenue contribution from derivatives and specialty business stood at 50%, against 53% Q1 25. But as mentioned earlier, we expect to reach to 70% by FY 28. EBITDA in absolute value dropped by 7% to 163 crore. However, despite of lower utilization and decrease in volume, company is able to maintain EBITDA margin at 27%, and this is on account of operational efficiency. Till March 25, company was in old tax regime, considering the benefits which were available, such as additional depreciation, benefit of ATI and MAT credit entitlement. On completion of MAT credits so available, company has reassessed its long-term growth strategy and consequential tax implication and shifted to new tax regime of 25.17%. This reduction of tax rate by 10% not only led to tax saving, but also improved profit after tax and EPS going forward. With shifting to new tax regime, the provision for deferred tax liability has one-time credit of rupees 81 crore, thus resulted increase in PAT to 160 crore in Q1 FY 26. If we exclude this one-time credit, the PAT stood at rupees 79 crore. As such, the PAT margin increased to 26% Q1 26. In case if we exclude the one-time credit, the PAT margin remained almost at the same level of 13%. As mentioned earlier by Maulik, in Q1 26, the PAT has also been impacted on account of interest and depreciation expenses of chlorotoluene project, as the project is yet to contribute to top line and bottom line in sizable manner. ROC grew to 24% as of 30th June 25 versus 21% as on 30th June 24 due to improvement in earnings. Our net debt to EBITDA reduced to 6.06x as on 30th June 25 versus 1.6x as on 30th June 2024. This is mainly on account of reduction in net debt. In Q1 2026, company has spent almost rupees 122 crore for ongoing expansion of ECH and CPVC. With this, we can now open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Neerav from Envil Wealth. Please go ahead.
Yeah, good afternoon, team. So I have a few questions to ask. Sir, first is on the ECH. So out of our total ECH volumes, how much would be on spot and how much would be on contract?
So ECH, it's running at our almost 70 to 80% capacity plant. Exact contract and commercial, I think details we are not able to disclose at this point of time. Hello?
Hello, am I audible, sir?
Yes.
Sorry to interrupt, sir, but there is some noise, sir, from
now it is clear?
No, sir, not from your line. Sir, I think it is the mic.
It's not clear. It's still the same.
Now it's clear, sir.
Okay.
So one more thing here, when we see the ECH prices which have recently strengthened, so two things here. One, possibly we are using the crude glycerin for our refined glycerin plant and then converting to ECH. But when we see the delta in terms of the crude glycerin, the prices have gone up more than what we have seen the prices of refined glycerin going up. So any particular reason for the same, why such discrepancy in terms of the prices between the crude and the refined one?
So crude and refined, I think both are moving in a tandem only. So when the crude is increasing, the refined is also increasing in the same line. There is no differentiation in terms of the price to go up, But yeah, you are right that the price of the glycerin has gone up recently, and that was because of, I think, the demand in the biodiesel is not picking up, and the production of the biodiesel is slightly lower compared to the past. People are moving, all the countries are moving to increase the biodiesel in their sustainability program compared to the normal diesel. But that is not moving as the speed of biodiesel capacity is coming up. So, but going forward, definitely country like Indonesia, Malaysia, Brazil, they are moving, increasing the percentage of blending with normal diesel. It is increasing on year-on-year basis. So in the future, we believe that we will have a more the glycerin coming in the future. But yes, you are right that this year, this is because of the supply-demand issue. There is a high glycerin crude oil, and the refined glycerin price is moving ahead. Yeah.
Got it. So that could be the only reason why ECH prices have been moving up, or are there any plans which have been under shutdown and because of which we have seen the strengthening in the ECH prices?
No. So globally, if you see, the propylene capacity is shutting off. That's why all new capacities are all glycerin based, and that is the demand of glycerin is also increasing. And same time, when normally the global economy is doing good, the normal glycerin consumption in other application other than the manufacturing as a raw material, that is also moving up in the consumer products. So when the country's economy is doing good, like US numbers are great and they are doing great. So they are importing compared to the previous years, they are importing more glycerin in this financial year. So that kind of things are affecting the overall glycerin price.
Correct. And so normally, it is difficult to differentiate between the spot and the contract volumes for ECH, but normally when we enter into a contracts with the customers, are they 1 month contract or they are slightly a prolonged one? In terms of price?
Volume? No, in terms of prices, it's on the monthly or the quarterly basis, but the volume contract is on the yearly basis.
Got it. So second question is on the chlorotoluenes. You mentioned that we have already commissioned the plant, and possibly by end of this year we could see the products or the volumes ramping up based on the various products in between we have on the chlorotoluene chain. So just wanted to understand from you, excluding interest and depreciation, if we take our fixed cost for the entire complex on a base of 100, how much fixed cost would have gone up with the commissioning of chlorotoluene?
See, in terms of that, this is every year going to happen whenever we commission any plant. There will be a cost by the time we reach the optimum for that particular plant. So it's difficult to give specific number for this particular project at how much it would be there in the P&L and how much it will be not once we reach the optimum.
Correct. Got it. And so last question is on the ECU. So if you can just highlight what was the ECU realizations for this quarter and how much was chlorine negative?
So the ECU was around 35,000 and the chlorine was somewhere around minus 5,000.
Correct. So just a follow-up here, if you mentioned ECH capacity at 70 to 80%, if you can just separately give us for peroxide and caustic, that would be very helpful.
So caustic utilization is somewhere around 70 to 75%, and hydrogen peroxide is running at 100%.
Got it. Thank you so much, sir, and wish you all the best. I'll join back in the queue if I have any.
Thank you.
Thank you. The next question comes from the line of Jatin Damania from Swan Investments. Please go ahead.
Good evening, sir, and thank you for the opportunity. Just carry on to the earlier participant questions in terms of ECU. So what is the current scenario when you compare with the ECU and chlorine prices, when you compare with the last quarter?
So compared to the last quarter, ECU has been 1 rupee here and there, so it's not a major move. But compared to if you see the last quarter, then it is high by maybe 2% kind of thing. So it's not much move. It keeps on revolving around 32,000-33,000 kind of thing.
And in last quarter, if you look, our overall capacity utilization was lower at around 70 to 75%. So I understand there could be a maintenance shutdown. So is this maintenance shutdown the cycle is completed, or you would see some sorts of subdued utilization in the Q2 as well?
It has been in the same range what it is in the Q1. So that will, as Maulik earlier specified in the opening remarks, the maintenance work will be majorly completed by end of this quarter. So maybe Q3 onwards, we will get the optimum utilization of the caustic soda, and that's where we have said that H2 will be much better than H1.
Sure. And on the chlorine consumption front, now we have already started our commission the chlorotoluene, so definitely the benefit will come in the second half, the major benefit. So just want to understand in terms of the chlorine consumption, captive consumption, which is with 76%, which was last year, what will be the optimum chlorine consumption once the chlorotoluene comes in place?
So, your voice was pretty clear, but what I understand is you are asking about the chlorine consumption. So chlorine has been in similar range around 75% captive consumption, but down the line, as we will be expanding in CPVC, ECH, that percentage will go up.
Just to answer your question, the chlorotoluene, in terms of capacity, in terms of chlorine consumption, is almost negligible compared to the plants of epichlorohydrin and CPVC and the chloromethane. Yeah.
Sure. Thank you.
Thank you. The next question comes from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah, thank you for taking my question. One question is on PPT. You have mentioned about the looking for a new chemistry. So can you just elaborate on what kind of chemistry we are exploring now, and what's the timeline which we are expecting to be breaking through?
Yeah. So, Rohit, we are right now evaluating the project. As I mentioned, we are evaluating one more project in the existing site also to make our entire integrated complex much stronger. And that will be, I think, the last project at this site. And then we are also working on the similar lines, much bigger size of project on the new land. But once the board will approve, then only we are able to discuss probably in the next, in the quarter 2 or quarter 3. Yeah.
Okay. Got it.
Again, just to add to what Maulik, Rohit, just what Maulik said, it is the new land, the new project will be into the similar lines of what we have done in terms of import substitution product, where the demand is expected to grow in a double-digit percentage, maybe 12 to 13% CAGR for next 10 years, and where we can generate a good ROC. So similar to what we have done in our import substitute products like ECH and CPVC. So again, as Maulik said, it's still in the working stage. But soon, in a couple of quarters, we will announce.
Okay, got it. Secondly, on the CPVC side, just wanted to know what's the scenario right now, given there's a ADD on PVC, how we are looking at this segment, and how's the price movement there?
So, Rohit, currently the CPVC price realization is also lower because of the same time the PVC price has also gone down. So yeah, it is like in glycerin and the ECH, the price is moving in tandem. When the raw material price increase, also the finished good price increase. Same time in the CPVC, PVC price has gone down. That's why the CPVC realization has also gone down. But after anti-dumping duty, I don't think so it is going to be the major change in India in terms of the price, because of the global demand is lower in terms of the PVC. Definitely the India's demand is very high, but the global demand is still on the downside. Yeah.
Okay. Got it. And just one clarification, sir. I think I missed the number. Our caustic plant was operated at 73% in this quarter. How much right now we have achieved after 1 month, and what kind of level we are expecting for the Q2?
Yeah. So, Rohit, every 8 years we have to do major change in the membranes and the coatings of the electrolyzers. So that process is going on in the site right now. So which will end up by end of September, and probably from Q3 onwards we are able to run at higher capacity. Yeah.
Okay. And just if you can share the capex and debt number for FY 26-27, which we are looking at.
FY 26, the debt number should be, the net debt number should be in the range of around 600 to 600 CR kind of thing. And the capex, as we have said, this year will be spending around 450 CR. So out of that we have spent around 120 CR, so balance will be spent in 9 months. And again next year the capex will be in the same range, around 400 CR, 450 CR.
Okay. Got it. Thank you and best of luck. Thank you.
Thank you.
Thank you. The next question comes from the line of Kautuk Yamde from Axanoun Investments. Please go ahead.
Hi, thank you for taking the question. I just had a couple of questions. Please, can you give me the utilization levels for the chlorotoluene plant for this quarter?
Sorry?
The utilization levels for the chlorotoluene plant.
It's still at the trial stage. In terms of the products are getting out, and it's at the approval stage with the customers. So it's difficult to give any number in terms of utilization. It's too early.
Okay, sir. Understood. And the last question is, what is the competitive intensity that you are anticipating in the next couple of years?
Sorry?
The competitive intensity.
Sir, sorry to interrupt. May I request you to use a handset?
Hello.
Yes, sir.
Hi. So, what is the competitive intensity you are anticipating in the next couple of quarters?
So, as you know, this is a trial production, and the samples we have given to the customers. Once they will approve, it will give us a trial order, and once the trial order will be given, then the commercial order will be converted. So this cycle will take some time. So we are expecting by Q3, end of Q3, I think we are able to done with this, and the commercial run at a full and optimum level we can able to run from the Q4 onwards.
I was asking about the competitive intensity that you are anticipating in the existing.
So as of now, we are the only player in India, and yes, there are players who have announced, but as of now, we have not seen anything on the ground. So once it comes, it will be clear. But considering the way India is growing, there is going to be a good demand in this particular segment as the agrochemical and the pharmaceutical segment improve further.
Okay, sir. Thank you. Thank you.
Thank you. The next question comes from the line of Jyoti from Senco Mutual Fund. Please go ahead. Hello, ma'am. As there is no response from the participant, we'll proceed with the next participant.
Hello.
Yes, ma'am.
Hello.
Yes, ma'am.
Yeah, good afternoon, everyone. My question is regarding ECU realization. Like, if it includes flakes and hydrogen realization as well, while calculating ECU realization?
So ECU realization includes the sales value of caustic soda minus chlorine price.
It does not include flakes, it means.
Sorry, does not include?
Flakes and hydrogen.
No. But flakes is converted to 100% in the liquid form, and it is so indirectly flakes quantity and ECU is converted. Yeah.
And how much is the proportion in that?
So currently our capacity is what we produce in the liquid. We have a 20% capacity converted to the flakes.
Okay. And what about hydrogen? Hydrogen is included in ECU realization? Hydrogen contribution?
No, also not included in the ECU. Yeah. So ECU is a global term derived for only caustic soda and the chlorine.
Okay. And my second question is regarding captive consumption of chlorine. As you said, it is 75%. Then how much is the pipeline sale included in 75%?
So when we say 75%, that is including the pipeline customers. Yeah.
So, how much is pipeline?
It's a 25, around 20 to 25%. Yeah.
Okay. And my last question is regarding that you have mentioned that we have entered into energy supply agreement. So how much renew power we are expecting from this agreement?
So it is 19.8 megawatt as a hybrid power. It means 19.8 megawatt is solar and 19.8 is windmill. So in terms of total wind and solar together is 38 megawatt, but it is considered as a 19.8 hybrid policy. So this is earlier also we have done the similar size, and this we are adding. So total hybrid capacity has become almost 38 megawatt.
Okay. And 38 is at peak, correct?
At this moment of time on this site, 38 megawatt is considered as a peak.
Okay. Down the line, future requirements will be getting through wind solar only.
Yeah. So now no longer we are going to add a coal-based power plant in our premises as well as in the new site also. So mostly we will do it in the future also, in the wind and solar hybrid only.
Okay. Thank you, sir.
Thank you. Before we proceed with the next participant, a reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Pratik Oza from Systematic Group. Please go ahead.
Sir, thank you for the opportunity. Sir, my question is on chlorotoluene value chain and its go-to-market strategy. So, will we be initially leading with less complex, higher volume intermediate to secure faster customer approval? Or our focus will be towards more complex, higher margin derivatives from the outset? That would mean more deliberate ramp up. Just wanted to understand that.
So, Pratik, we are starting with a basic molecule only right now, but definitely we are working on the higher derivatives also, and going forward, we eventually will convert into the value-added chemistry only from this value chain.
Got it. And sir, in the previous call, you mentioned about the membrane replacement for the caustic soda plant. I guess it is completed in May. So in from 2Q onwards, we will be seeing a higher operational efficiency, right, from the caustic soda plant perspective?
Yes, that's right.
And if you can give how much reduction can we expect in terms of power consumption per ton of ECU because of this membrane replacement?
See, it is the entire plant is not on the maintenance side. So some of the plants, so we keep changing. Some of the elements are keep changing on every 4 years. So half the plant is on the completely new, half the plant is on the moderate level. So every average out, I think it remains the same level. I don't think so it will add certain things, but because of the efficiency point of view, you have to keep changing this in every 8 years. But average overall, I think our consumption will remain more or less in the similar manner. So by the time it will new will start with a better efficiency and better energy consumption. The plant which is running currently, which will become older. So that will have a higher consumption. So it's the way the people are operating globally.
So on an average, we are at currently efficient only.
Got it. Thank you so much for answering me.
Thank you. The next follow-up question comes from the line of Neera from Envil 12. Please go ahead.
Yes, sir, thanks for the opportunity again. Sir, one question on the power side. So, if you can help us explain, like, what would be our total requirement of power, considering our 75% capacity utilization? I think in last of the interaction, you mentioned that it was close to around 130-140 megawatt. So, if you can just let us know the total requirement of power currently, and let's say once chlorotoluene's ECH expansion and CPVC also comes through, what will be our peak power requirement?
So peak power requirement will not increase. So it is including the captive power plant, captive power consumption also. Our power requirement will not increase more than 135 megawatt from this complex.
Correct. So what would it be currently, sir, if you can highlight?
So currently that number I don't have it in my hand. Yeah.
Got it. And sir, you mentioned that the additional wind hybrid would be available to us from 1H of FY27. So total would be close to around 38. So what sort of PLF we should take on this 38 megawatt, or this is the peak load which we could achieve, and 38 megawatt is the contribution to be available from these projects altogether?
So normally in a solar and wind, you can consider almost 50% is a reasonable factor based on the current in Gujarat region. So you can consider almost 50% efficiency from this total hybrid power plant capacity. And
and the rest would be available from our captive coal-based power plant.
Rest will be available from captive power plant, and we also do buy government power also from grid.
Got it. Sir, just a follow-up on the chloromethane. So, what was the utilization for our chloromethanes plant in first quarter?
100%.
100%. Okay. Thank you so much, sir, and wish you all the best.
Thank you. Before we move to the next participant, a reminder to all participants, please, you may press star and 1 to ask a question. The next question comes from the line of Rohit Nagraj from B&K Securities. Please go ahead.
Yeah, thanks for the opportunity. The first question is on chlorotoluenes. So in terms of, we'll be utilizing the capacity eventually optimally, but have we faced any teething problems, or it is just a normal process of increasing the capacity over the next few quarters? Thank you.
Sorry, Rohit, can you repeat your question? I missed it.
Yeah. So we will be increasing the capacity over the next few quarters at optimal level, right? So have we faced any teething issues, or it is just a course of action that slowly we will be increasing the utilization levels?
So normally we are running at 80% capacity because we are not able to increase the capacity so far in the chlorine and caustic capacity because of the chlorine is a limitation. That's why we entered into the chlorine derivatives and we try to increase our capacity, how we can remain efficient. So probably once our expansion of ECH and CPVC will be over, we are able to run much better efficiency than the 80%. That was the target what we have.
Sorry, my question is slightly different. In terms of chlorotoluenes, have we faced any teething troubles and that's why we are going slowly? Or is it just a normal process that we start with 10-15% and eventually over a few quarters, we will reach to maybe 70-80% utilization?
No, it is not because of that. That is the normal way because downstream pharma and agro customers, they don't approve like the other products which get approved in the shortest span of time. So which takes time for the approval. And that is the cycle which need to set, and then only you can reach to optimum capacity, and that will take time. Even though the samples are approved, trials are approved, then to reach to a commercial level quantity on a continuous basis, that the vendors also need to have a confidence we are able to supply the same quality consistently, and then only they transfer slowly and gradually the volume onto the domestic level compared to the import. Till that time, people continuously import. Yeah. So this is a cycle only in this segment.
Got it. And second question, in terms of the chlorotoluene products that we are likely to manufacture, which particular markets will be displaced, where it is coming from? Is it predominantly China, or are there any other areas or other countries from where currently these products are being substituted?
So, there is one plant in Japan, one plant is in Europe also, couple of plants in Europe, and the remaining everything, all capacity is coming, it is in China. So, but European capacities are not running full, and the European manufacturing are in trouble already in this chemistry. Japanese, we heard that is also running at a lesser capacity. So mainly you can consider that is negligible volume coming from other than China. Yeah.
Okay. And one just last bit, in terms of the newer chemistry or platform that we are targeting for new site, are we again looking at the same kind of user segment or user industries, or will we be looking at some new user industries than currently which we are serving? Thank you.
So new site, it is going to be completely different. It is not going to depend on our existing customers or existing site. No, it is going to be completely different value chain. So it is not going to be the same users or same customer base. Yeah. It might be overlapping some of the customers, but as a segment-wise, I think it is going to be completely different on the new site. Yeah.
So we'll further diversify in terms of our all product portfolio put together.
Sure. Got that. Thanks a lot and all the best.
Thank you. The next follow-up question comes from the line of Jyoti from Sanco Mutual Fund. Please go ahead.
Hello.
Yes, ma'am, you're audible. Please go ahead.
We have seen that Adani and Reliance is going to come with a bigger capacity in financial year 27. So what we are expecting regarding chlorine prices, it will go further down?
So, chlorine, I think they are converting most of their chlorine into the PVC. So, I don't think that chlorine will come in the market.
And what about lye?
Lye, they are able to, mostly they will come in the market, and they will be they are focused on the export market, as they will produce in the liquid and majority in the bulk, and they are near to the port area, both the location. They will target mostly the export market, Southeast Asia or the global market. Yeah.
Okay. Thank you, sir.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Shubhanshu, an individual investor. Please go ahead.
Yeah. Hello, am I audible?
Yes, sir, you're audible. Please go ahead.
Yeah. So I was, there's a higher interest cost on this quarter. What is the primary reason behind that? And will this be the normal going forward on the 600 crore net debt that we have?
Yeah. Shubhanshu, yes, you correctly observed interest costs have gone up in this quarter compared to previous quarter. But this is mainly on account of the negative impact of mark-to-market provision. That is the tune of around over 11 crore. If we ignore that, our interest cost is, compared to previous quarter, has gone down by almost 1 CR or something like that.
So these derivatives and hedging, is it on forex or on interest rate hedging where we have received such loss?
This is the enter into the interest rate swap derivative. So this is again that.
Okay, so this should not be really expected going forward because if the interest rate stabilized, correct?
Yeah, it may remain the same level, but it depend on along with the currency as well as the interest rate, how it's going to move forward.
Yeah. So it will get, maybe on this level, or it might actually give a gain in the next quarter because of mark to market. Because if you see our Q3 FY25, there we had actually zero interest, but there we got the mark to market gain. So overall put together, it's just a mark to market, whereas our interest expenses in the range of the year put together would be in the range of 45 CR.
Actual domain.
For the entire year I should look at. So you think I should look at the entire year, and the entire year should remain constant. In some quarters there might be gain, in some quarters there might be got.
Yes. Yeah.
Sure, sir. And can you tell us how much from the chlorotoluene plant, right, in the quarter for FY26? How much revenue can we expect when you are saying we might start getting commercial orders by then?
So commercial orders, it's on the trial side. So as we discussed earlier, the sizable revenue should start from the Q4 onwards. So I guess it's too early to give you exact number. Maybe Q4 we will be able to provide more clarity.
Sure, sir. And the R&D center that we have inaugurated some 2 years back, is it primarily being used for the chlorotoluene chemistries or for all the chemistries that we have?
It is for both the things, because in chlorotoluene also we are already going 2 level down in terms of the reactions at the plant. We are further working on the downstreams that we are going to do at the plant. So the R&D is working on that, as well as there are further molecules in the specialty segment where the R&D is working. So it's for both.
Got it, sir. And can you utilize the same R&D centers when, let's say, you were talking about some newer chemistry might be coming up? So will that be feasible there or not at this stage? You cannot say.
No, that way we have kept the provision in terms of the space at the R&D center, and we have created that kind of infrastructure where we can do further new chemistries as well in the current R&D.
Sure, sir. Yes, sir. Just one last question. You mentioned about the pipeline customers for fluorine. Who are these pipeline customers? Is it being sold in general market or is it our subsidiary? Is it our sister company?
So there are various companies. There are the Make Money company as well, and as well as there are other companies who are next to our plant where we provide chlorine through pipeline.
Sure. Thanks. Thank you.
Thank you. The next question comes from the line of Deepti from Molecule Venture. Please go ahead.
Yeah. Hi, sir. Am I audible?
Yes, ma'am, you're audible. Please go ahead.
Yeah, sir, I had questions regarding the CPVC. So the current demand scenario is a bit sluggish, and one of our competitors has started their production facility. So in the coming quarters, do we feel that there will be impact on our realization?
So realizations of the CPVC moves in line with the PVC prices. So as of now, we don't see that. Currently, there is a monsoon season. In fact, the monsoon started earlier in this year, because of which there is a bit sluggish in the demand. But we expect that the demand should start from the Q3 onwards once Diwali starts. So we don't see major impact on the demand side. It's just the monsoon, because of which there is a bit slow demand as of now. It will pick up once the monsoon ends.
Okay. And so this ADD on PVC, will this have any impact on our EBITDA margins?
ADD on PVC. So that will be applicable for all the manufacturers. Eventually, yeah, it will impact the CPVC pricing as well. But generally, as Milind has mentioned, it will move in a tandem with PVC price. So CPVC price will increase.
Yeah. So that will not impact our EBITDA margins in that way.
Okay. That's all from my side. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
In conclusion, I would like to convey that we are moving in line with the strategy for expansion plans and diversification in terms of multi-product catering various industries. We are targeting consistent growth. I would like to thank all for joining us here today. Thank you everyone for the participation.
Thank you very much. On behalf of MK Global Financial Services Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.
Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.